So I thought I would do a video just to explain exactly what you might find from this channel. The idea is to do daily summaries and focus on ETFs and their corresponding setups. The reason that I focus on the ETFs is that within the ETFs you can find the individual stocks that will have some institutional and some ETF flows. The reason that I focus on ETF flows is because, as you can see, there are 5,600 public listed companies. It's almost impossible to find a stock that will make the next biggest move. So that's why I allow fund managers and people who are taking care of millions and billions of dollars worth of funds, let them do the research and I can piggyback off the research that they have done. This way I don't need to focus on looking into whether the stock is good or not, because the work has already been done for me. And then within the ETF baskets, you can buy the ETF or the individual stocks underneath the ETFs. For example, when I highlighted Jets in an earlier video, I highlighted that it was a breakout and I didn't buy this ETF. Instead, I looked through all of the holdings and I found one that I wanted to buy, or a few that I wanted to buy. You can simply enter into Google the term here, you can see it, and it will give you all of the holdings. Don't always trust AI, verify it. So I've gone onto some of the links and you can see some of the largest holdings here. Now, before discussing what I have bought, I thought I would give you an overview of some of the things that you might find on the channel. So this is the chart by itself. Typically you would see the chart like this with just the price and the volume. What I tend to add into my charts are the 50-day and 200-day moving averages. These are the settings for them. If you want to add, just search this term. If you are on a limited account, this allows you to add multiple moving averages. Now the way to add this is to click here on the indicator metrics and strategies, type in the MA ribbon, click on it, and it will add it to the chart. You just have to configure it how you want to. You will also see the volume profile on the right hand side. This tells you what the volume is at each corresponding level, which is helpful when you want to understand what the resistance and support might be at particular levels. These are my settings, and you can add it using the same function that I mentioned before. I also use the ATR multiple, and I use it as a guide to tell me how big my stop loss should be. For example, if I was to buy here somewhere, let's say I bought this breakout here, I would just double check that my stop loss is larger than my ATR, because I don't want to be whipsawed out on a day-to-day move. Now the next thing that you might see is me projecting some targets. Typically for a breakout, I aim for the 1-to-1 move. So you can find the indicator here, the price range. All I do is measure the base to the neckline and I project that upwards, and that is your target. While this isn't 100% accurate, I also use the bars pattern indicator. It gives me an idea of how the consolidation breakout might take shape, or how long it might take for the target to be reached. You can find it here. All I do is mark the start of the neckline until the breakout, right click, and I mirror. And then that dot here, I line up with that header at the breakout location. And then that gives me an idea of how long it might take for it to reach the target. However, it's not gospel. And finally, I've removed so much off the chart, and this looks like a bit of a mess, but it is the Ichimoku. I won't go into too much detail in terms of the functionalities of it. You can find other references for it. Other people on YouTube discuss that, or you can find some books or Google it. However, the gist of it is that if the price is above the cloud, we are bullish, and if price is below the cloud, we are bearish. This is the lagging span, which is the price projected backwards, and you've got sort of the mean reversion line here, and you've got a fast conversion line here. So this is the Tenkan and this is the Kijun. As discussed before, what I do is I use the ETFs and the way that they look in terms of their setups to identify the individual stocks. I will highlight this one as an example. Love LUV, which is Southwest Airlines. That is a position I took. I bought the cloud breakout here. I set my stop loss so that it's bigger than the ATR, and I set my target for a 3-to-1 on this occasion. This still has a long way to go in terms of its 1-to-1 move, as you can see here. However, there is some resistance there, as you can see, marked here by the horizontal line. This is not the only way to trade the system. However, in terms of the cloud breakouts or level breakouts, you can also trade some mean reversion bounces. So in this instance, I was fortunate enough to get the breakout. However, if I didn't, what I would be doing is I'll be waiting for the price to close below the conversion line and then cross back up the conversion line for an entry. Alternatively, I'd be looking for price to close below the Kijun line and close back up again before taking a position. Just to show you an example of what this looks like, this is 10xg, which is a biotech stock. As mentioned in my earlier videos, the biotech sector also looked good. What you can see here is the price peaked, it went below the conversion line, and it went back up again, meaning that it's looking strong and it's not looking like it's about to trend bearish. The lagging span is still above the price, and therefore I would take a position here. While the ATR suggests 5.9% intraday volatility, I can clearly see that there are some lows here. So what I would do is I would either set my stop loss here or here, depending on my risk reward profile. It's the same idea with the Kijun line. And you can trade based on whatever your preferred risk reward is. If you are always setting a target of a 2-to-1, then that's where you take your profit. And if on this instance, and I know it's a big if you did enter this, set your stop loss a little bit below that initial breakout candle, you would have made your target at 2-to-1, risking 9.5% and gaining about 19.8%. This is Teladoc, which is a part of the ARK ETF. As you can see, the ARK ETF is looking like it's breaking out to the diagonal. It's looking bullish on the daily. That is when you can start looking at certain setups within those ETFs. Looking at Teladoc, this is an example of pretty much everything that we've discussed. You have got the cloud breakout round and round. Let's assume that you have missed this entire breakout. How would you capitalize on this move? You know that it's bullish, you know that it's in the ARK ETF, which is potentially looking bullish. This is too high, you have no idea whether it's going to dip to zero from here or not. What you do is you wait for the conversion line or the baseline cross. So here, it crosses below the conversion line, crosses back up again. Now it's meandering in the zone between the TK lines. You wait for a bullish close above there. You don't get it on a bullish candle. So personally, I would not enter on here. Let the move go without you. That's absolutely fine. Here what we have is a close below the Tenkan line. You could buy here. Set your stop loss to ensure that it's either below this low or the ATR percentage. Let's assume that we're putting it beyond this low. And you'd get stopped out here. However, if you put it below the Kijun, then you'd still be in the trade. Where you put your stop loss is up to you, and it should be based on your risk reward metric. Next, what you have, if you did get stopped out on that previous move, what happens here is it goes below the Kijun line and then it crosses back up, both the Kijun line and then the conversion line the next day. So you could enter at similar prices. So let's say you enter at the higher price, you'd either stop loss here, which is the 8.447%. The ATR is 4.64, which is about there. Now, if you're working with a 2-to-1 risk reward, that will be met. Right now, prices are about 5-to-1 based on your risk reward, and that is one of the ways that you can use the Ichimoku system to capitalize on ETF flows. I'm sure we are all familiar with the Fear and Greed Index. You've got a crypto version, which is in extreme fear. Stock market is in fear at the moment. The reason that I mentioned VIX a lot is because I use this as a guideline, a definitive guideline to understand how much risk I take. I tend to take 1% risk per trade. However, if this starts to close above the 20s is when I look at reducing my risk, so I take 0.5%. And I do that in conjunction with looking at the SPY. If price is below the Kijun here, I take 0.5% risk on every trade. As you can see at this point in time, price is above the Kijun and the VIX is below 20. So despite the Fear and Greed Index showing 32, I am taking full size positions. Now, while I might not show individual setups in the future, I will definitely cover the ETFs. It would be down to yourself to look at the individual setups within the ETFs, but I hope you found some value in this video. If you do, please like, share, comment, and subscribe.